Good day, everyone. This is your entrepreneurship teacher, Dang Day So Long. How are you today? I hope and pray that amidst COVID pandemic, you are still battling with positive vibes mood. Okay, we're almost done with entrepreneurship and hopefully we'll finish at the end of this month. Are you excited? Today's video lesson is focused on Module 10. This will help you understand more on the concepts of bookkeeping and guide you in performing your module tasks. Before we start, please have a copy of your entrepreneurship module number 10 on bookkeeping. So what are our objectives? We have here content standards. So the learner here demonstrates understanding of concepts, underlying principles, and processes of starting and operating simple business, which I think you have done this from at the very start of our entrepreneurship. Performance standard: the learner independently or with his or her classmates starts and operates a business according to the business plan and presents a terminal report of its operation. And when we say independently or with his or her classmates, I think I have observed that you really followed my instructions, that you group with your neighbors or with your closest relatives nearby. And you are going to present a terminal report of its operation, meaning to say, when you say a terminal report of its operation, it is from the trial balance until the income statement. Milk. We have here the most essential learning competencies, and one of these is to manifest understanding of starting and operating a simple business. And we have these two milks here: perform key bookkeeping tasks and identify where there is a profit or loss for a business. Our content here is, of course, lesson 2, implementing a simple business. Okay, so let's continue. Let us review first. We had our business plan presentation with projected income statement, and I asked you to make a five-year income statement, and this is projected. We have here revenue, and you just have to deduct the cost or the expenses from the revenue, and then you will then arrive the gross profit before tax. And then that's it. That was our projected income statement, which majority of you have already submitted. Our new lesson for today is on bookkeeping. Our objective is to perform bookkeeping tasks. And what are the topics that we are going to discuss today? Number 1, what is bookkeeping? And please get ready with your module again, number 10, page 4. What is a book of accounts? We have here journal and ledger. We will be discussing on that. What are the rules of debit and credit? What are the normal debit and credit side of balances? And we need to also perform trial balance, income statement, and balance sheet. Now, first of all, let's start with the question, what is bookkeeping? Bookkeeping here is a process of recording business transactions. It is called systematic, meaning to say it follows procedures and principles. It is also chronological, meaning in order of the date of occurrence. So let's start with, for example, if we start with today is February 11, so our transaction starts with February 11. Then, who is in charge of recording? We call it bookkeeper. He is the one who used the book of accounts. Now, what are these book of accounts? Book of accounts are the general ledger and the general journal. And for general ledger, under general ledger, we also have subsidiary ledger. And we will discuss on subsidiary ledger next time. Now, what are the rules of debit and credit? Debit here has abbreviation DR. This is the Latin root debitum, what is due, or we call it value received. Credit here has abbreviation CR. It's not a comfort room, but it comes from the Latin root creditum, something entrusted to another, or the value parted with. For each account title, there are steps. You add all the debit side to generate the total debit. Then you add all the credit side to generate total credit. And then you subtract total debit to the total credit. And then you can determine the balance of each account. So let's start here with, I have here my general journal and general ledger. Okay, I'll explain this to you. Now, for general journal, we have the captions. We have the first column here, date, and then next is particulars, then reference, and then the balances, which has two columns, debit and credit. So, for example, on February 1, you have a transaction. The owner would like to have the investment of cash in the business. By the way, I have here the name of a company, R.S. Jagens Entrepreneurial Company. So, meaning to say, this is entrepreneurial services. So, when we record the investment of the owner, for example, I am the owner, I own the R.S. Jagens Entrepreneurial Company, I have to debit cash in bank. That is the value that I receive. That is my asset. And I have here the amount of 300,000, so that belongs to the debit side. Okay? I have here my credit. It is the parted with, no? So, I need to credit my capital. So, my capital here is already credit on the credit side. And I need to explain that under particulars, and that is to record owner's investment of cash in business. Now, let's proceed to the general ledger. Now, here is the general journal, and the other side is the general ledger. Now, as I have mentioned, I have my transaction of February 1, which is cash in bank. Now, I would like to record the cash in bank. Now, where do I record the cash in bank here? So, I need to go to the general ledger, which is the general ledger has the different account titles to post. Now, let me post first my cash in bank. My cash in bank here in the general ledger has also date. I have here my explanation, reference, debit, and credit. So, February 1, what happened to February 1? Now, I would like to refer to general journal here that on February 1, I have here cash in bank. So, here in my general ledger, in my account title, cash in bank, I will post here February 1, 300,000, which is debit because that is on the debit side in the general journal. And I will also post here in the debit side. Reference is J1, and that is J1, journal 1. Why is the reference here 100? Because the cash in bank here has an account title number which is 100. Each company has to assign an account number to each account title. So it depends on the company which number has its assigned number to each account title. All right. So let's go back to general journal. My credit side here is J Dayso Capital. So again, I should have another account title which is J Dayso Capital. And I post the February 1, the Dayso Capital here. That is the credit side, and I will post this still on the credit side. What about office supplies? So office supplies here is debit. It is what I receive. It is my asset. So that is on the debit side. Now, parted with, I didn't pay cash. I purchased supplies on account from Cagayan Educational Supply. So, because it is on account, meaning to say I didn't pay in cash. I did not pay in cash, but inutang. So, because it is on account, then this is still payable from me to Cagayan Educational Supply. So, the proper account title here is accounts payable. So, again, debit is cash, office supplies, 12,500. And my credit here is accounts payable, 12,500. Meaning to say, my debit side should always balance with the credit side. The debit side, which is the one that I received, the value that I received, should be balanced with the one parted with. Next, for for number 3 transaction, for example, I rendered services on account for my entrepreneurial skill. I have rendered services on account. So I have a client here who did not pay me in cash, but I rendered my services on bookkeeping, but then I did not receive cash. Pero inutang. It says here, services on account. So because it is on account, my account title here is accounts receivable. It is still receivable. I didn't pay cash. And that is my debit. 15,000. That is still my asset because I have a receivable. And my credit side should be my income, my service income. That is the one parted with. I have receivable and I have services, which I call it service income, which is 15,000. And later, you go to the general ledger and make an account, another separate account, which is accounts receivable, and another account, which is service income. Next, I have another transaction here that I receive cash for services provided on account dated February 3. So, meaning to say, when I refer to February 3, I had receivables, right? But then, on February 6, the customer or my client already paid me. So, because the client already paid me, I receive cash in bank. I receive cash in bank. Now, because I received cash in bank, what happened to my accounts receivable? Did you remember that the accounts receivable here was on the debit side? Now, how to make it zero? Because I don't have accounts receivable anymore. The client has already paid me on February 6. So, I need to reverse the accounts receivable so that in my general ledger, it will be a zero amount. Alright? So here, my cash, my debit here is cash in bank because I already received cash from my client whom my services was rendered to on account. Then to zero out the accounts receivable, then I have to credit it. Previously, I debit the accounts receivable, and then because I have been paid already, then I will reverse it, so I make it credit accounts receivable. Next, on February 7, I paid my light and water bills. So when I pay my light and water bills, my debit side is utilities expense. Now, for the water bills, for the light and other bills, we have a proper account title, which is utilities expense. Okay? You remember that. So that is my debit. I need to have it debited. All expenses are on the debit side. Now, what is parted with? Of course, I credit cash in bank. I paid. So, I have my cash outlay. I have here credit cash in bank, which is 18,000. Now, what happened to my cash in bank there? When you go to the general ledger, let me see, let me show this. That was, wait, cash in bank, 4,000. Okay, let's remember this, February 10. Now, in my posting in the general ledger, I would like to see if I have February 10. I have February 10 here, 4,000. So, I have posted the cash in bank here, 4,000. Have you seen that? Okay, let's go back. Now, for number 8 transaction, I have here my number 8 transaction. I withdrew cash for my personal use. Okay? So, when I withdrew cash, I credit cash in bank. Alright? I credit cash in bank because it should be that my cash in bank should be deducted from the balance. So, for the cash in bank to be deducted from the balance, originally, it was debit, right? So, my cash in bank here will be deducted because I have withdrew it. I withdrew 100,000. So, here, because I withdrew 100,000, it is being credited cash in bank 100,000. What is my debit? I have here my debit, J. Dayso drawing. Now, for the bank withdrawals, we call it drawing. It's not the art drawing, but it is the drawing, meaning it is the withdrawals of the cash. Alright? So that will be my debit. For taxes and licenses, again, as I have said, all expenses are on the debit side. So taxes and licenses here is on the debit side, 4,000. And because I paid, then my credit here is cash in bank, 4,000. And that is the payment of my annual registration to BIR. Now, my last sample transaction here is accounts receivable. Meaning, the rendered services again on account. Maybe this is another client that I have. So, my debit here is accounts receivable. The client did not pay me in cash, but utang. So, I receive so I debit accounts receivable, meaning to say, I will still have receivable. So, this is on the debit side. This is still an asset for me because it will be received later in cash. Of course, my credit, again, is service income. Now, let me remind you that in each transaction, you have to determine if it is cash on hand or cash in bank. If there are transactions like there is already cash in bank as stated, you just follow. If there is also just cash, just follow, just place it cash. So that it will be consistent in your general ledger. It will be consistent that you have cash in bank or you have cash. Because there is also another account title which is cash on hand. When you say cash on hand, it is the one that is not in the bank. It is still in your cash register maybe, or in your pocket. And that is still to be recorded as your cash on hand. Alright? Now, let's go back to the steps for each account title. It says here, add all the debit side to generate total debit. Add all the credit side to generate total credit. Subtract total debit to the total credit. And determine the balance of each account. Now, let us go back to my ledger here. My ledger here says, no, under cash in bank, it says add all the debit amounts. So I add 300,000, 15,000, 315,000, and that is the total here, 315,000. And the credit here, I have this formula. The credit here has 18,000, 100,000, and 4,000. And when you add them up, it has a total of 122,000. Now, the difference here is 193,000. And 193,000 is my final balance in my cash in bank. Now, my question is, how do you know that it is on the debit side or on the credit side? When we talk about final balance, whichever has the higher amount, then you follow the side of the higher amount. For example, here in cash in bank, the total here is cash in bank 315,000 for debit. For credit side, the total is 122,000. Now, the difference here is 193,000. So, which one is higher here, the debit or the credit? Obviously, it's the debit side, which is 315,000. So, your difference here, of course, which is 193,000, should be on the debit side. All right? Now, this is very important because when we start to make our trial balances, then all the final balances of each account title should be the one that is to be posted on the trial balance. Now, let's go to the trial balance. Now, I have here RS Jagan's Entrepreneurial Company Trial Balance, February 28, 2021. So, I only have 3 columns here. Particulars, debit, and credit. So, I have here my particulars, 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 particulars or 9 account titles under particulars. I have cash in bank, accounts receivable, office supplies, accounts payable, J-Day-So capital, J-Day-So drawing, service income, utilities expense, and taxes and licenses. Now, where did I get these account titles? Of course, the account titles here are from the general ledger. And the general ledger comes from the general journal. So the general ledger here, I have only prepared 2 account titles, cash in bank and the J-Day-So capital. Now let's go back. Let's go back to the trial balance. Now, as you have noticed, our cash in bank here has 193,000. Where did I get that? From the general ledger. That is 193,000. So, I only have here again J-Day-So capital. There's only one. The amount is 300,000. There is no other transactions except on February 1 for Day-So capital. So, Let me copy that J Dayso capital here to my trial balance. That is 300,000. And that is J Dayso capital 300,000. That is credit side. Take a look. That is on the credit side also. Next, let's proceed. Let's proceed to the trial balance. So, if you've tried to finish the transactions and post the general ledger of all account titles, then this should be the amount that these are the balances that should show up. For accounts receivable, we have 20,000. Office supplies, we have 12,500. And accounts payable here has credit 12,500. J Dayso Capital has a credit side of 300,000. J Dayso Drawing, a debit side of 100,000. Service income, credit side of 35,000. Utilities expense, 18,000 debit side. Taxes and licenses, 4,000 debit side. Then it should be balanced. Total balances of debit is 347,500 and credit side has a balance of 347,500. So, that is why it's called trial balance. It should balance both debit and credit. Are you with me so far? Now, how do I present the trial balance? As you can see here, the first part here are all assets. Okay? Cash in bank is an asset, accounts receivable is an asset, accounts payable for office supplies is an asset. Then I have here my liabilities, accounts payable, of course, liability. Capital and owner's equity. I have here my credit side and my drawing. I have to show my capital, which is 300,000. I should not deduct it immediately, but I have to show the capital and the drawing. Then service income has credit side, and again, expenses here have debit side. Now let's proceed to the income statement. For the income statement, all you have to do is just to record or compute the income and then deduct all the operating expenses from the income. Here, because this is entrepreneurial company, we have entrepreneurial services. And my account title here is service income. My service income here has 35,000. And that is based on the service income stated on the trial balance. By the way, if you make your income statement and balance sheets, the balances should be coming from the trial balance. If your trial balance is not balanced, then you cannot have a proper amount of your income statement and balance sheet. So make sure that you have a balanced trial balance. Okay, so let's start here with service income, 35,000. And this is the proper presentation. Less operating expenses. So far, we only have 2 operating expenses. We have utilities expense and taxes and licenses. So, by the way, this is not, the column here is not debit. The column here is not credit. The placement here is for purposes of a very good presentation of an income statement. There is a proper indentation for you to really compute the in a proper way. So, service income here is indented, 35,000, and make sure you have a peso sign. The first amount should have a peso sign. The preceding amount should not have a proper sign anymore. And here, for operating expenses, I have my peso sign because it is the beginning of the column. I have here 18,000. And my taxes and licenses is 4,000. I did not place a peso sign anymore because there is already peso sign here. Now, I add them up, and that is 22,000 as total operating expenses. So, the service income, which is 35,000, less or deduct the total operating expenses, which is 22,000, then you arrive the income or the net income of 13,000. So, I have to place here peso sign. Every time you see, if it is the final amount, it should have a peso sign. All right? Now, for balance sheet. Here, the balance sheet is composed of assets and liabilities and owner's equity. So, assets here should be balanced with the total liabilities and owner's equity. Now, let's start with assets. Now, there are different kinds of assets. We have current assets, non-current assets. We have plant, property, and equipment. But for purposes of this module, we only have very simple assets. If there is no non-current assets, that you just simply have to write assets. Okay, but for purposes of the discussion, I placed here current assets. Now, in our transaction here, we only have current assets. And the current assets here are cash in bank, accounts receivable, and office supplies. Now, you just add them up and you will have your total assets. Now, why are these called current assets? These are called current assets because this can easily be liquid. And when you present the current assets or the asset, it should be in accordance with liquidity. Meaning to say, when you say liquidity, the first one to be converted into cash. So, of course, the first one is cash in bank. This is already cash. This is already liquid. Then, the next is accounts receivable, which is to be converted into cash later. And office supplies is also liquid. You can have it sold then, if ever. So again, we have a total assets of 225,500. Now for liabilities and owner's equity. The composition of liabilities and owner's equity are, you separate liabilities and owner's equity. For liabilities here, by the way, liabilities is also current and non-current. Here, liabilities is only one. We only have one current liability, and that is accounts payable. So we have here your 12,500 as your accounts payable. Okay, where is the accounts payable in our trial balance? Is that correct? Yes, 12,500. It is there. All right. Then you have this in the last column. Your owner's equity here is composed of your capital, less drawing or your withdrawals, and then you add your net income. Where do you get the net income? Okay, on top from the income statement, you have there net income. Is that correct? Net income here is 13,000. So again, owner's equity, J Dayso capital 300,000. I have here in another column because I still have to deduct the drawing. So 300,000 minus 100,000, that is my total net capital, 200,000. And I add net income, which is from the income statement on top, 13,000. Add that, And you have here 200,000 plus 13,000 makes it 213,000. Now you add the total liabilities and total owner's equity, then you will arrive the total liabilities and owner's equity of 225,000. So make sure that your assets in the amount of 225,000 should balance with the total liabilities and owner's equity, which is 225,500. Now, what about the normal debit and credit side of balances for the book of accounts? Now, please refer to the matrix found on page 10, and this is it. These are the normal balances. So, assets here have normal debit balances. Liabilities, owner's equity, and revenue have credit as normal balances. Expenses and assets again have debit balances. Okay. So, what about the specific account titles of assets? So here we have the normal debit balances, except for the what we call the contra account. For example, we have here allowance for doubtful accounts. Now, what is this? When we have accounts receivable, there are times when we have customers who have not paid us yet. And for a long time already, and you are about to close your book of accounts, and there's no way to collect them, it can be that you will have it separated in the allowance for doubtful accounts. So meaning to say that is the contra account of accounts receivable. Meaning if you show it in the ledger or in the assets or in the balance sheet, you have here accounts receivable less account allowance for doubtful account, and that is a contra account. That is why it is on the credit side. Though normally this is supposed to be part of asset as debit side. We also have another contra account, which is accumulated depreciation. For accumulated depreciation, this is the contra account of equipment, because equipment will always depreciate. So you have here an account title which is accumulated depreciation, the contra account of equipment. So meaning to say, the cost of equipment becomes lesser. So you are going to deduct the accumulated depreciation from the equipment. So when you show this to your balance sheet under assets, equipment less accumulated depreciation. That is why it is found on the credit side. For liabilities, all liabilities, current account and long-term accounts have always credit side. For owner's equity, capital, it is also on the credit side. The contra account here is drawing, that is why it is on the debit side. All income or all revenues are on the credit side. All expenses are on the debit side. So these are the normal debit and credit balances of accounts. For the book of accounts, it is always best to use Excel format, especially when you start with the general journal and the general ledger. So let's go back to my worksheet here, which is this general journal. I have here my formula that is already with formula. All the debit side here, I just have to add up, and then the difference of the two balances, debit and credit balances. And when we proceed to the trial balance, then it's so easy if you use Excel, so that, for example, your net income here, which is supposed to be added to the owner's equity, I just have here plus P11, which is the P11 here, which is P11 here, 11. The P11 here is under the income statement of the net income. Okay? So it is easy for you to check if you have a balance sheet, if your assets have the same balances with the liabilities in owner's equity. Okay, so I hope you have learned something today. For your performance task, it will be an integration across curriculum with practical research subject. And this has milk as follows: collects data through observation and interviews, draws conclusions from patterns and themes, and formulates recommendations based on conclusion. And I think this is already stated in your weekly home learning plan. So please prepare a brochure for your research project or output. And at the back page is your projected income statement and costing. Let me remind you, same grouping of business presentation, classmates, neighbors, or relatives, following proper health protocols. And let me accommodate you to, especially to the online users. I would like to meet you via Google Meet tomorrow for a special session as our enrichment activity with those who have queries in our topic on bookkeeping. And for those non-online users, you may just chat through our group chat. God bless everyone.